Yeah, ladies and gentlemen, it's nice to have you here again, and let's continue our lecture on General Introduction to Tax Law. So, to talk about the basics of tax legislation, and today, Chapter 1 4, Part 3, Working with the Law, Procedural Law. So, what's procedural law about? That is what we are going to talk about just now in a second. Okay, then let's start. Procedural law, that is the law about all that procedures, what the bureaucracy or what the administration has to follow. So it's not about the amount of tax which you have to pay, but the way how the fiscal office has to deal with your case. Now, the first thing is probably that you think, why should I be interested in rules like these? Because how officers have to work on my case, that's not my problem. And the answer is, oh, yes, it is your problem because there are nice, surprising rules, but nevertheless necessary rules in the area of procedural law. For example, one of the most important aspects is legal certainty. We already mentioned that. So, how can you be sure that the fiscal office does not only tell you what you have to pay, but that they also have to stick to what they told you and can't change their mind every 2 seconds? You know, that might be a good idea to practice some chicane on a taxpayer. Just say, hello, pay 100 euro in the morning. Next morning, no, give us 120. Next morning, no, we are now satisfied with 110. So you do not end up only paying taxes, but you end up becoming mad and, yeah, completely confused afterwards, because then you would never be able to trust the information which you get from an authority. So there must be rules for that, that you can rely on your first tax assessment, at least under the most circumstances. There should be rules, for example, how to determine who is going to write your tax notice. Otherwise, it might be that for the poor people, no tax officer feels responsible, and that the rich ones always gets tax notices from everybody. That would also just create a chaos and can't be. So let us have a look. Just the main problem with all that procedural law stuff is that you and me usually not understand where the problem is at all, because we can't imagine where problems might be. We usually look to how much do we have to pay, and the rest is something which we can't imagine. So let's imagine something went wrong. The fiscal authorities informs you, for example, that while they were reviewing some old documents, they have found out that your many great grandfather in the times of Napoleon had bought a piece of land, and that the assessment of the real estate transfer tax has at that time been forgotten. They tell you at the time in 1812 there had to be paid a tax of 10% of 100,000 euro. And yeah, that this tax has never been paid. They have found out that you are the only heir of your many great grandfathers. All the others have died, and all the other branches of the family have become extinct. So the only person who is now responsible for that still unpaid debt is you. And naturally, as the time has gone by, interest has piled up on the original debt. And so that, just to have a conservative estimate, the interest for approximately 200 years or so, or 208 years, is, let's say, 240,000. So a tax burden of 10,000 originally unpaid 200 years ago is now 240,000. 50,000. In reality, it would be probably far more. So now they knock on the door and tell you you have to pay that tax. Now you will probably say, what? I should be held responsible for things which happened 200 years ago to a person which I never knew? Can that be just and fair? And the answer is, it's written in the law. Every tax must be paid. But now, common sense would say that's rather a bit old. And it's a bit strange. Everybody would find that strange. But as long as it is written in the law, they would have to collect the tax, apart from the case when the law really says there is a time limit when all the old stuff is all over and gone by and can be forgotten. And naturally one does this. It's really unbearable that you and we always should live with the risk that after we inherited something from our parents, we might also be responsible for old debts. Or even if it's not a case inherited, but a case relating to ourselves. Imagine at the age of 14, you earned some money by helping some others in your class with their homework, and you had yourself paid by them. Huh? €5 or 10. Now, 30 years later, you admit that in a video online, and the fiscal authorities set up their ears and say, there somebody earned money and didn't declare that in the income tax declaration. There is still a tax unpaid. Now imagine in the meantime you are 80 years old or 50 or 60, and now somebody digs up some unpaid issues which are 50 years old or 30 years old. Evidently, that's a bit harsh. And so there should be a time limit for these things. Indeed, the law in nearly every country does this. It is unbearable if legal disputes never stop. By the way, I'm interested in history, and in old Egyptian history there was a court matter where a family claimed a field from a neighbor, and the whole thing was already 60 years old, the whole dispute, and it seemed to be going on. That makes no sense. So there should be a cut. Even if things have gone wrong, they should be forgotten after a while. And this time limit must be laid down in the law, naturally, because if such an important decision as a debt of 1 million taxes does not need to be paid anymore if it has been forgotten until now, such an important deviation from the rule of equality of law, such an important exception must be stated in the law itself. You can't leave the decision if one renounces on a tax or not to the ideas of the individual tax officer working on the case. Imagine then you have a lazy one, says, 1 million here owed by Mr. Smith. That's rather old, 2 years already. Let's put it aside and close the file and forget about it. That's too old, expired. Or somebody else is keen on a promotion in his job and thinks, I'm going to dig up all the old things. And for me, things which are 2 years old are still recent. And I'm even going to take up cases which are 8 years old. So the one doesn't need to pay the 1 million because the tax officer is lazy. The other one has to pay even after 8 years. That's intolerable, so you need common identical standards when to forget about the old stuff. That is set down in the law. So that would be an assessment time limit. or deadline for an assessment. And after that deadline has been reached, the case would be closed without any regard to if the case was dealt with correctly or not at all, or then everything is old stuff and finished. All over and gone. So the problem exists in every country. And I dare to prognostice that you will find no country in the world where it still would be possible to raise a tax claim which is 300 years old from the surviving members of the family. So everybody will have a time limit for tax assessment or so. And naturally, the amount of years where the time limit is then made, that is probably different in every country, because you cannot say there is a clear limit from a logical point of view. Things get older in the course of time, so when do you feel it is intolerable to dig up the old stuff? That is a matter which everybody can decide on its own, and so there will be expectable different solutions in different states. Naturally, you will probably not find any state where the time limit for an assessment is over just after a year or so. On the other hand, 100 years will also not be found, so you can probably can expect some years, 4, 10, so 30 is probably too much. So you will have to look for that into the individual states' laws, but naturally there will be some rule, because it would be intolerable to leave that to the discretion of the officers involved. In Germany, the general rule is that the period of assessment is 4 years for the most taxes. Now the question is, for example, how do you calculate 4 years? Also, this must naturally be then regulated. On this later in a minute. If you were very, very careless with your case, then they reserve the right to even react after 5 years. And if you committed tax fraud, then with regard to the things which were dealt with fraudulently, they reserve the right to even react still after 10 years. The deadline may be prolonged under special circumstances for special aspects of your tax. For example, if your tax assessment goes to court. So you objected against the tax assessment matter, went to court, and then there are long disputes and court sessions, and the court only makes a decision after 6 years. Now, a clever member of the fiscal administration might say, yeah, the court said we must change the tax notice, but too late. 6 years is more than 4 years. So naturally, one of the exception clauses will be, as long as a case is pending in court, it is still possible, allowed by extra rule, special rule, to react to the court's decision, and a tax notice can always be changed with regard to what a court ordered, or what was the reaction to an objection, even until the regular assessment period is over. That's clear, but it should be written down. Otherwise, people would complain about that. Now you must know that these deadlines are usually followed exactly. You must see such a deadline only makes sense if a matter went wrong, if an injustice happened. Why? Well, if your tax notice claiming 1 million was correct, and nobody will ever make any disputes. There will be no debates. So a deadline for changing the assessment is not necessary. If everything is correct and nobody doubts that, then it's a clear thing. You don't need any deadline. So then the deadline has not a really material effect. Such a deadline for assessment gets material importance when things went wrong. So you owe 1 million to the fiscal administration under the law, but they only claimed 200,000 because they made an error in analyzing your tax declaration. You didn't even lie. They just made a mistake. And now imagine that happened to two people. One person where Mr. Smith works on the case and one person where Mrs. Miller works on the case. Now Mr. Smith detects the error 1 minute before midnight, 1 minute before the assessment period is over, and says, okay, I'm going to react. I still write tax assessment correction. Now Mrs. Miller is a bit more a woman of common sense, and she says, well, just 1 minute. That's rather close to the deadline. Is it really nice to claim additional 800,000 from somebody just because of 1 minute? The answer is, well, yes, under the law, yes. Because if it happened before the deadline, it still must be done. Now you think, that's not generous. And the answer is, well, with taxation, people should not be generous. Is it nice for you and me that we pay our taxes regularly and somebody else, there they show generosity? We would probably not understand why they brutally take away our 2,000 and then renounce on 1 million with the idea, well, it was so close to the deadline. So before the deadline, they will still react. Now, if the deadline is over, then also injustices will not be cured anymore. And now imagine they made an error to your disadvantage. So they claimed 1 million taxes, more than was due. And now the error is noticed 1 day after the assessment period was over. Now you could also say, but it's only 1 day. So it might be that somebody says, only 1 day, I still correct that. But then the question is, what happens to the person where the error is recognized 2 days after the deadline is over? Well, that's only 1 day after 1 day. So you have an endless chain of little small deviations. And if you leave that to the discretion of the tax officers involved, then in the end you have perhaps Mr. Smith thinking 1 day is a very small deviation, so I still give in and correct the tax notice. And you might find somebody else who says, no, 2 days is too much, or 1 day is too much. Then in the end, your tax fate would again depend not on the law, but on the individual mindset of the person working on your case. So you would not be taxed fairly anymore, but just on the basis of coincidence, and that must absolutely be avoided. I would not understand why my 1 million is not given back if somebody else who also was beyond the deadline got his or her 1 million back. So a deadline is a deadline. And that means really, if a deadline expires at 12 at night, and the taxpayer drops in a letter into the letterbox of the fiscal administration announcing, I have found a mistake, and that letter is dropped into that letterbox 1 minute after midnight, the reaction will be, it's unfortunately communicated after the assessment period had expired. So we are very, very sorry, we can't help you anymore. By the way, now you will naturally say, how strange. How can they find out when the letter was put into the letterbox? And the answer is, at least in Germany, when you walk around and watch the letterboxes of important authorities, there is usually a special letterbox for time-limited things where you can throw in your letters, and there is a timestamp printed on the letter, or that letterbox is automatically closed at 12 at midnight and then replaced by a new letterbox for the next day. So the one box is automatically closed, moved aside, and then the letterbox for the next day's letters is shifted to the slot to throw in the letters, just to make sure that they exactly know the next day when a letter reached them, before or after the time limit. So there they are, very strict, and they must be, because if two people lose, let's say, a repayment claim of 1 million because it came too late, then these two people should at least be treated in the same way. So you can't allow that one officer tolerates a deviation of 1 minute and another tolerates a deviation of 10 minutes. It's when the deadline has expired, everything is all over and gone by. And again, if you think that is too drastic, and if you want to show pity and grant people an exception, then again, in order to ensure that people are treated fairly and equally, then you should lay down the possibilities to claim such an exception in the law again. And indeed, that is what you will find everywhere. So, such deadlines, by the way, exist everywhere in the field of administration, because the need that after a certain while there must be certainty about the legal relationship and the legal dealing with the matter, that need exists in every field of law, not only in the field of justice. That can be highly awkward if you end up in a country where you are condemned to death by a court decision, and then your lawyer misses the deadline for an appeal to a higher court, because then somebody might really tell you, well, you had the right to apply for a review of the court's judgment, but you did it too late, after the deadline only, and so the deadline then really becomes a deadline, because due to missing it, you are dead. Good. So the assessment time limit, the deadline for an assessment, really matters, and the single minute matters. So imagine you are a tax advisor and you have set up a letter to your fiscal office of your taxpayer, where you, acting for your client, apply for a change of the tax assessment, and that would bring a refund claim of 1 million for your taxpayer. Now, the deadline for handing in that appeal ends at 12 o'clock in the night. Now, unfortunately, you go to a party, have the letter in your suit, and only remember to drop in that letter at 3 o'clock in the morning. So you take a taxi, go to the fiscal office, put in the letter, and then it's clear what happens. The fiscal office writes your letter. Thank you for your letter, where you appeal to a change of the tax assessment. You laid out that the tax assessment was wrong. Unfortunately, we are not allowed to even work on your appeal because it came after the deadline. So by this visit to a party, you caused a damage for your client because your client lost a refund claim of 1 million. In that case, we can only wish you a good insurance. Because your client will say, hey, I had a refund claim of 1 million. You dropped in the letter too late, so you spoiled my case. I lost my 1 million due to you. And you know, pity is not granted by the fiscal office because they say there are rules. And the rules clearly state when pity can be shown and exceptions can be granted. It might be a human tragedy, but it's not our problem. That is something where the client and the tax advisor now have to fight for among themselves. No problem of ours. Now, it might also happen that such a tragedy happens without that somebody can be made responsible. For example, tax advisor makes the letter, goes to his car, wants to drive to the fiscal administration. That is only at 6 o'clock in the evening, so there's ample time to reach the fiscal office. Now, unfortunately and completely unforeseeable, the car of the tax advisor is hit by a bus. Tax advisor is run over in half, goes to hospital, lies there in coma, and only at 3 o'clock in the night they bring him back to life. And the first thing tax advisor says is, must bring a letter to the fiscal office. Now the deadline is also gone, but one should perhaps consider that this was really unforeseeable, that every necessary precaution had been taken, that this can really not be reproached to the persons involved, and so it might be that the law grants an exception. Indeed, you will find very often exception clauses for deadlines which have been passed, where you then get a description under which circumstances a deviation from the deadline, a prolongation of the deadline, can be granted if a person missed that deadline without being responsible for that. So, although that person had shown every necessary care. So, if a deadline is over, one should at least have a look for exception clauses if one can bring the deadline back to life or can still claim the possibility to get the case worked on. But then the chances are considerably lower than before because naturally deadline is deadline. General clause applies apart from rare exceptions. This here would be a rare exception. Now, you perhaps know that in many states, when an authority makes a decision on your case, so they write you, for example, tax assessment, how much you have to pay, that you can object against this if you think it's wrong. Then the matter can be brought to court. And we have already said in one of the last videos, okay, before you go to court, you have to object and communicate your reasons why you think the decision has been wrong to the fiscal office so that they can review their opinion and give in if they think you're right. Now it might be interesting, or it might be even a catastrophe, if, for example, you and me had the right to object 1 year, 2 years, 3 years after we got a tax notice. We spoke about legal certainty and we said legal certainty must exist about taxes because A taxpayer wants to know how much of my income remains and can be spent. That's your interest. But you must see, on the other hand, naturally the state also, they want to get the money, not to pile it up, but they want your tax and they want to be able to spend it. So also the state has a very hard interest in getting informed as early as possible that a certain tax claim is disputed and perhaps not safe for them, so that they know which money cannot be spent. So when you get a tax notice, there is usually a short period for objections. In Germany, that's usually 1 month. But in general, many states again have that problem. They want to know when they are safe and can spend the money, and so they will set deadlines for complaints against their decisions. And naturally, again, a deadline is a deadline. If you are 1 minute after the deadline, then everything's gone over and finished. Then you lose your rights, because then your objection will not be worked on. The law forbids to change the original decision if you do not communicate an objection in time. Now you will say, well, there are let's say 4 years to work on my tax case, but the objection period against a tax notice is only 1 month. What about the other 3 years or so? Well, that is not a contradiction, because naturally you hand in your tax declaration, then the assessment period begins to run, and well, they won't write you a tax notice directly. So probably there is some delay. You get your tax notice only after 2 years. So within the deadline for the assessment, your assessment is done. Now you get your tax notice, and then you have 1 month of time to react and say, I do not agree. If you let that month pass, then your tax assessment, your tax notice is finished and can't be changed, at least not on the grounds of your appeal anymore. Then your reasons are lost. It can be under very restricted circumstances that a first tax notice can be changed later. That can only be done during that assessment period. And again, if a change comes, you can object again within 1 month. But in principle, the idea is, if a tax notice comes, it stands, can't be changed if the objection period is over. So you can't say, as long as the assessment deadline is not yet over, everything is still open. No, the case is usually closed as far as a decision has been made when you didn't react with an objection in time. Good. Now it's really devilish, because when you say everybody has the right to object against a decision of an authority which you regard as wrong, then you end up with an additional problem. What is a decision? So, for what do you give your taxpayer a right to object, so that the fiscal authorities have to review their behavior? Now you would say, oh, that's really... why? And the answer is, well, imagine somebody goes to the fiscal office, visits his fiscal officer, and fiscal officer says, good morning. Now you look to your watch and say, hey, good morning. We have 2 minutes before noon. This is not good morning. You should have greeted me by hello, or a similar formula. Good morning is insulting, because that conveys the impression that I have just woken up. I object against being greeted with good morning. Now, That's the problem. Do you then have to work on such an objection? Taxpayer writes you a letter, blah, 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 scandal, uh, violating my human rights, blah, blah. Do you have to react to that? Or can you ignore that? So now you would say nobody is going to do that. But imagine you have 10, 20, or 80 million people having to do with the fiscal office, and you don't like the fiscal office. And the people working there you don't like too. So what do you think? Would you find at least one in the population who does this just to make additional work for these bad guys? Or just to make them angry? Just to practice some chicane on them? I think there will be the one. Will there be more than one in 80 million people? Yes. And if that 10, 10 or 100 people get away with that and it works, would you also give in to that temptation next year? Just writing an objection and keeping your tax officer senselessly busy for another hour to write an answer to your objection, and the answer is yes, naturally you would. You pay and you pay and you pay, and then you see what politicians do with your money, and sometimes you think, okay, now it's time for revenge. Now I write an objection based on nothing, against nothing. So you must define which things are worth an objection, where you can make an objection and where that is senseless. Well, now, that is why an administrative act is defined, at least in the German law, but the others will also do it. And so an administrative act is defined in Germany, in the AO again, as a decision of an authority in an individual case which provokes or fixes legal consequences. So if there is no consequence for your individual case, the thing is no administrative act, no decision against which you can oppose. Makes sense. So being greeted with good morning in the afternoon is nothing where you can object against, because this has no legal consequences. Getting a letter, we demand hereby a tax of 500 euro from you, is something which fixes or sets legal consequences in your individual case, so you can object against this. By the way, one also has to regulate who has the right to oppose a decision, and the standard answer is only the people who are affected by the decision. So, if I am of the opinion that one of my neighbors pays too much taxes, I cannot on my own sit down and write a letter to the fiscal authorities. I hereby object against the tax notice of my neighbor. No, because it's not your business. You can't interfere with things which affect only others. You have to bring forward that the wrong decision affects your own rights. Everybody fights for himself here. I can appoint a tax advisor who then in my name, so on my order, writes for me. But the person who writes or who gives the order, that person must be affected by the wrong decision. You cannot cure the whole world. Other people's business is not your business. That is also true with administrative acts. And now another thing is basic. If an authority makes a decision, you are not forced to review it if it is correct or not. In general, the idea is what an authority demands from you is assumed to be legal, and therefore remains valid and in force if you not object against it, or until the authority itself changes its decision or the decision loses effectivity in another way. So even if they make a decision which is wrong, the legal assumption is what they demanded from you is right. And if you do not agree to that, you have the duty to object, which means if you let the objection period pass, then the administrative decision, the administrative act stands, remains valid, and will be executed even if it is wrong. That is for tax advisors a huge challenge because you have some taxpayers, some clients who tend to be depressive. They get letters from the fiscal office and say, oh no, I'm not going to open that letter today, I don't read it. And then they don't react to that for weeks. And then they hand that letter over to their tax advisor. Tax advisor opens letter and sees, okay, objection period has passed. So we can no longer protest against this. Apart from cases where we could prove that the taxpayer, perhaps due to sickness, couldn't react before. And now that's a very bad thing. It might be possible that you get an attestation from a doctor that somebody due to depressions was not able to act. That would be a really strong case, probably somebody not leaving the bed for 24 hours for weeks or so. Now the problem is, if a person is no longer able to open a letter, that person will also not visit a doctor. And so later it will not be able to prove that due to such a sickness you were not able to react, so you can't reopen the deadline and your objection possibilities are gone. That's a huge problem. So one of the tasks of a good tax advisor is always to educate and train the clients. Whatever letter you get from the fiscal authorities, hand it in to me, bring it to my office immediately. So even if you don't like the contents, then leave the letter closed, but bring it to me so that I can open it and can react within the deadline. Can communicate we do not agree with the contents, and the reasons are communicated later. There must be a reaction within the deadline, otherwise any administrative act remains valid and in force. Naturally, again, if you take these rules for serious, then you have again an additional problem. You will have to distinguish what is one decision and two decisions. Why? Well, the rule is every administrative act, every decision to which you not objected in the deadline, within the deadline, stands, cannot be changed. So if there were two decisions communicated to you on one paper and you only protested against one of them, the other thing stands and is fixed. I have a very, very disgusting fantasy. Imagine you end up somewhere in court in a country where criminal law still knows the death penalty. You are condemned to death. Execution is going to take place on the 24th of December at 8 o'clock in the morning. Your lawyer writes a protestation letter within the objection period. My client is totally outraged by the decision. Executing somebody at the morning of Christmas Eve is a complete violation of all respect and so on. Yeah, and sends a letter to court, and later court answers, well, we entirely agree, we made a mistake, it's really a sign of bad taste to execute somebody on Christmas Eve, so we are going to change that decision. The date is now 6th of January. And then, next line, we didn't change or review the condemnation to death because Against this decision, you did not object. And here you see that it really matters to be able to distinguish if something is one decision or two. Every decision on which you not react stands and is accepted. So that is sometimes a science in itself to find out how many decisions are communicated on one piece of paper, because if you do not react to everything, all the things where you do not oppose stand. Now the trick is, sometimes it might be that the authority took a decision which you like, and naturally you do not oppose that, and then usually the decision is binding for them too. And so it might be a good strategic idea only to object against the things which you really don't like. Even if the others are wrong, if they are favorable for you, you might accept them just by remaining silent. Good. So as you see here, a grave tragedy might happen if somebody is assessed with taxes of 10 million euro and then protests too late, then objection period is over, and so the decision stands and can only be changed if the law allows explicitly a change, and that is usually difficult to find. Now you have additional problems. For example, usually when a decision has to be reviewed, you have to decide what you will have to do now. Fairness might at the first glance require that if somebody objects to a tax decision, that decision is not yet final, so that its execution will be postponed. Seems to be fair. On the other hand, think again twice. Imagine you're a business owner, you have to pay 150,000, and you have to pay it 1 month later. Good. Now you want to keep the money a bit as a kind of cheap credit, and so you just write an objection. I do not agree with the duty to pay that money, and my reasons are, and now you write out complete rubbish. My reasons are, I don't feel well, I think taxes should not exist, blah, 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 blah. And now it takes some time to work on that objection, and so you get the answer 3 months later. Now imagine if they had that automatically would entail the right to pay later. Wouldn't we then all write objections just to keep the fiscal administration busy and to shift the due date to the future? And the answer is yes, we would, naturally. So we would just provoke unnecessary objections, chanceless objections, just to get a postponement of the payment date. And naturally, you can imagine that the law is wise enough to hinder that. For example, in Germany, you have the rule deviating from the rules in all other fields of administration. In tax law, we have the rule that if somebody objects to a tax payment, that does not postpone the duty to pay. So you have to pay at the given date, and you get the money back later if your objection is found to be correct, well-based. If you want to obtain a postponement of the due date, you have to make an additional appeal, and then the fiscal administration will review your reasons which you brought forward. If the reasons are regarded as serious enough to raise doubts in them, if they acted correctly, then they are held to grant you a postponement of the due date. But if at first glance they see, well, that will not be able to convince us, then there will be no postponement of the due date. There are other problems in that field. For example, you don't object to the fiscal authorities, you directly write to the fiscal court and want to start a lawsuit against the fiscal authorities. If that is allowed, then the fiscal courts drown in unnecessary cases, because it might be that the fiscal authorities might give in. So I already told you that in that case, the rule is you first have to communicate your objection against the fiscal authorities, and afterwards you can only go to court. Now, what happens if you didn't appeal with an objection within the objection period? Yeah, then an objection is no longer possible. So the question is, can you then go to court? And the answer is no, because that would make the whole objection procedure senseless. An objection is necessary before you go to court, just to block off all the unnecessary cases. And that also means that if you didn't object in time, you also lost your right to go to court. So that is important. And now imagine you objected in time, you got a decision from the fiscal authorities. Sorry, we don't give in, we stick to our opinion. Oh, good. Now you are shocked, and 20 years later you say, I'm going to dig up that thing again. They wronged me at the time, so I'm not going to tolerate this anymore. Now I take the matter to court. The answer is, court will then probably say, well, isn't that case a bit old? And didn't the state have a need for legal certainty too? So if they didn't accept your decision, your objection, sorry, then they had naturally the idea that from the moment when you did not react anymore, they could be safe and could rely on that they could spend the money. So legal certainty required that you had to react within a short time. Usually after you get a decision from the fiscal authority on your objection, and that decision is negative for you, you have to react within a short time and go to court. Usually the time limit for starting a lawsuit, communicating that to the fiscal court, is usually also 1 month after you got the negative decision of your objection. Otherwise, you could never finish a case again. So time limits are highly important. The next thing is changes in a tax notice. I already told you it makes no sense if the fiscal authority first tells you pay 100, later says, we changed our mind, pay 120, then you never know what you can spend. So the basic principle is just as I mentioned. A tax notice is an administrative act, and an administrative act stands and remains valid until it is changed or loses its importance due to other reasons, for example, due to payment by you. And a change in a tax assessment shall only be allowed in extraordinary circumstances. Normally, it's your job to fill in your tax declaration. It's the job of the fiscal authorities to determine what you owe them. And then if they did that, you can rely on that. If they made a mistake for which you are not responsible, that's it. It's their job, not yours. The decision stands if you don't object. Now, there might be cases where that general principle provokes consequences which are not tolerable. For example, they made an error in assessing your case because you lied to them, so you committed tax fraud. Now later they find out the truth. Naturally, when they find out the truth about your tax fraud, it should be allowed to them to change the tax notice. Naturally, otherwise looking for tax fraud would make no sense at all. When a crime is detected, one must be able to draw the consequences. So naturally, it will be allowed that a tax notice can be changed under such circumstances. Nevertheless, there is a closed list of reasons for which a tax notice can be changed in Germany, and that will usually be the case in other states too. For example, if the tax authorities obtain new information, or if new proofs for the facts show up, then the case can be reassessed. There is an additional clause in the German law that if new facts arise or become known which are in the favor of the taxpayer, then they are only used if originally these facts were not communicated, or if the fact that these new information came up with delay, was not present at the original assessment date, if that fact cannot be reproached to the taxpayer. So if the information was really new, or if the proofs were not available at the time, or if the fact that you didn't communicate them at the last date, it was not your fault. That is necessary because, well, imagine again 80 million people hating the fiscal office. Would it be a nice hobby to say, okay, I give in my tax declaration, I say what I earned, let's say 50,000, and then I say I had deductible expenses of 2,000. So I'm assessed on the basis of an income of 48. And after a while, let's say 2 months later, I write them a letter. New information has come up. I found an invoice which confirms that I had 1,000 euro of expenses more. Please change my tax assessment from an income of 48 to 47. Then you cause them the work. They have to redo the whole case. And then some months later, you would probably then say, new information has come up. I detected proofs for another 2,000 deductible expenses, so please correct my original tax notice again from 47,000 income now to 45. Would that be a nice hobby to keep them busy and to make them suffer? Naturally. Would people do that? And the answer is naturally. Well, the world offers not so much opportunities for fun. This would be an opportunity for fun. You could torture other people by always bringing up the same case again, and it would be a no-risk case, so you would do it. Far better than killing cats in the night, because that's forbidden and that's immoral. The other thing would be serving a fair taxation, and you could make them suffer. So naturally, there was this additional clause, new information which is in favor of the taxpayer can only be taken into consideration when there are good reasons why this information was not communicated in the beginning already. That is a necessary self-protection for the fiscal authorities. Then, if a situation is treated in contradictory way, so imagine you apply for the deduction of 1,000 euro costs for year one. Tax officer writes you, no, not possible because that belongs to year two. Okay, now year two, you make again the deduction, apply for it, and they say, yeah, but it's deductible, but should have been deducted in year one. And they say, well, you wrote me in year one, it's for year two. And tax officer says, at that time I made a mistake. And unfortunately, my tax assessment for year one, you didn't object to that, so it stands. I have to stick to the rules, and unfortunately even more, I am bound by the law to write your tax notice for year two on the basis of the true circumstances, and the true circumstances which I now know mean the 1,000 euro deduction belongs to year one. I can't take it into account in year two. In that case, you would have a contradictory treatment of an event. Year one says take it to year two, and the other way around, so that in the end an impossible result comes out. That should also exist the other way around. For example, a revenue of 1 million is not taken into account in year 1 and in year 2. Then if such a contradictory assessment happens and is remarked, is noticed, then you can still correct that. That makes sense. Yeah? And sometimes things happen which change the view on an event, or even change the legal situation retroactively. For example, if one grants you a certain tax advantage under the condition that you do not do certain things within 3 years after the decision. And now you do it. So you violated the condition, and so naturally your tax assessment must be able to be changed. Good. A last aspect would be, for example, that you must also not only decide how decisions work, which effect they have, how you can object against them, but also who is the responsible authority with whom you have to communicate and who has to deal with your case. Because it might matter which officer is to be working on your case. Might be that you say, I select somebody who is a friend from school should work on my case, not somebody else. So you need strict rules who is competent or who is responsible to work on which case. Otherwise you have a chaos that, for example, the cases of the rich people are worked on by everybody and nobody feels responsible to work on the poor people. And imagine you send your tax declaration to a fiscal authority in Munich, and then a fiscal authority at Kleve asks you where your tax declaration is, and the answer is, well, I sent it to somebody else. That would not work, and so we must clearly determine which persons and which local tax office is competent or is responsible to work on your case. So you will also have rules where which tax declaration has to go to and which tax problem has to be dealt with by which local authority. For example, very often your income tax declaration has to be handed in to the tax office at your city of residence, or in the area which is to the tax office which is competent, which is responsible to work on all the people residing where you live, and that must be determined correctly. Sometimes you even have practical solutions there. Imagine you live at Kleve in Germany and you own a factory which is in Munich. Now imagine the person who has to assess your tax is also responsible to check the matters. And so the Kleve employee of the fiscal authority would be responsible to check what really happens in your factory in Munich. That's a bit difficult. So sometimes the work has been shared between different authorities. There are, for example, rules that if one owns a business and that business is not within the own area of your fiscal office, then, for example, the fiscal office at Munich gets the task to determine the profit from your factory and check that and write an administrative decision, an act, a tax notice about how high that profit is. This decision will then be communicated to you and to your residence tax office, and both will work on it. Now, it might be that later you think, but my profit from Munich was lower. Then the fiscal office at your residence will tell you, well, you got from the fiscal office in Munich a decision that we assumed your profit from Munich was 1 million. That was an administrative act because it was a decision and it was meant to create legal consequences that we decided your profit, which is taxable, is 1 million. You didn't object to that first decision within the objection period, so it stands and can no longer be changed. We will work with the fact that your profit was 1 million and there will be no debate about this possible anymore. No? The technical term for such decisions on parts of your tax base or so would be a separate assessment, no? Because then the decision, the assessment, how much you earned in Munich, is separated from the rest of your income tax declaration or income tax notice, and is an own independent administrative act. If you not object, your problem. It might even be that 3 people together run a business. Then it saves a lot of unnecessary work if the income of that partnership is assessed only once, and then the profit, which is the share of each partner, is communicated to their fiscal offices. So in that case, the separate assessment is done in a uniform way for all the partners involved. So there we would even talk about a separate and uniform assessment. And then again, the thing is, if no one of the partners involved complains, objects against the correctness of that assessment, then it stands because it is an administrative act. All these things are, and much more, many more, are laid down in the General Tax Code, the Abgabenordnung in Germany. And I hope I made it clear that that is not only the case in Germany. The problems which I described arise everywhere. So other states will also have a procedural law. Now, by the way, ladies and gentlemen, you see which enormous traps are contained in procedural law. You missed the deadline by 1 minute. Your rights are gone. And now you should also grasp and understand that naturally the decision of a state, is my deadline 1 month, is it 2 months, is it 2 weeks, that such a decision can be made differently in different states. So keep in mind, if you have, for example, to deal with a foreign state, their deadlines will be different. And the most important problem which you can have is you make an error about the deadlines. Imagine you learned in Germany the deadline is 1 month. Then you come to the strange idea that you also have in farawayistan 1 month's time to object. But it might be that there they have a rule you must object within 14 days. And so you lose all your rights for a review of your tax notice. So that is, by the way, one of the reasons why if you cooperate with other states, you always should make use of a tax advisor based in that country too, or work yourself deeply into that matter. And you can never ignore procedural law, because if you make a mistake there, you may be right, but you lose your rights just due to formalities. And that's really hard, and that usually entails the obligation to pay financial damages to the client for whom you acted. And so that's one of the few things which you should never be doing, because that affects your property personally. Good. That shall be enough for the moment, and I look forward to see you again soon. I hope you survived this first lecture well, and well, I hope you look forward with some positive expectations to the contents of Chapter 2, where we will talk a bit about the system, the classification of taxes, because you know there are many, many taxes, no? And so there will be many, many things still to learn. Thanks. If you survived watching this video up to here, then you were really great. If not, well, you never hear these words. So if you already finished watching the video before, then I can't give you some positive feedback or support. At least in all cases, I would like to see you again. And it might be nice if you subscribe to the channel. And it might also be nice if you communicate the links to the channel to other people so that we get a bit more of people interested in the field. Yeah, thank you very much. And till next time. That was enough for today. So let's enjoy the end and go away.